What's going on, guys? How are you? Welcome back to my YouTube channel. This is Shocks and this is Shocks Capital FX. So today we want to talk about inefficiency in the market and how best you can utilize that knowledge of inefficiency in our trading, in our institutional trading. If you are new to this channel, welcome. We talk about ICT and institutional trading with smart money concepts. So today we want to talk about or want to dwell in the issue of inefficiency. So as you might know, or as the Forex market is a zero-sum game, that means you can't fill a buy order without a sell order. So what that means is there should be a balance of price at each and every given moment. So when price goes up, it should go down. When price buys, it should sell in that sense. Okay. So when we talk about inefficiency, we are talking about that particular process not being fulfilled, or when we have some gaps in the market where we don't have the equal amount of orders in the market, where we need to fill some particular orders in the future or something like that. So with all that being said, that is theory, right? So I'm going to show you using charts, how you can spot inefficiency on your candlestick charts and how you can use that to your advantage in your trading. So when you look at any candlestick chart or any group of candlestick charts or any candlesticks, right, you should be seeing candles filling each other or without. Okay, let's look at this one, these three green candles, right? When the market is going up, it goes up like this, right? So when it goes up like that, we ought to have a balance. But when you don't have a balance, we are going to find gaps like this. You see where this week is, this week, then we have this week, right? This gap that price leaves is what we call a balance. So in normal or under normal circumstances, we should have been seeing maybe this pin protruding to that side, and this may be filling that gap like that. So when you see this, you know there is some inefficiency in the market. So that gap is what we call a fair value gap. So this is number one, inefficiency. So this can be seen using these three candles like that, using three candles, or you can see with one big candle. Have you seen when the major news releases how the market moves? That kind of a movement is what we call inefficiency. And if you can look back at those prices, you can see that those gaps are always filled in the future. So let's just look at one kind of that scenario so that we can really understand what we're talking about. You see this candle, right? If you have been trading Forex, you know that there has been some news element in this candle. We don't know what it is, but just by looking at it, you can see that there is news. And if you look at it, it has been it was filled by this down move. So that was an inefficiency, and this is the price that's filling the gap, right? So that's what we are talking about. Whenever you spot an inefficiency in the market, that market has to be filled for it to operate like a normal market, right? You see this big candle right here. This is all inefficiency, but where do we mark the gap? The gap is here where this week is, and the next week is that one. So this was the gap, and as you can see, price came and did fill that gap. So we are not concerned about this gap that price left. Why? Because that area was filled by this up movement right here, right? So that is a gap, and you see we have a gap here again, and it was filled here, right? Here we don't have a gap. Why? Okay, let me show you. This is the top of the candle, and this is the low of that candle, meaning there is no gap here, what we call a fair value gap. So inefficiency, that is inefficient. So how does it work? How does it all work? How can we trade inefficiency, or how do we know? So number one, inefficiency works as a magnet. Okay, it works as a magnet. So let me give you this example. Let's say we have an order block in this area, right? Then we have some fair value gap down here, something like this, right? So price will move like this. Price is moving, right? So maybe you want to sell at this order block right here. So what are you going to do? You are going to sell here and target this gap, this inefficiency. That's number one. So it works as a magnet to what? As a magnet to what? To price. So you're going to wait for this to be filled, right? That's number one. Then number two, you can have inefficiency like this, then you can have an order block just below it like that. So how does this work? It works like this. You have an order block here, you want to buy, so this just gives you extra confidence of your order that you want to press at that particular order block. So you are going to wait for price to fill this gap first. So price is gonna move like this, right? Fill that gap, then retest your order block and go up like that. So this is how you are going to look at it. So price has to fill this, creating some liquidity at this zone, then retest your OB and go. So those are the two scenarios, not the only two, but those are the two which I would want you guys to go and test in the near future. Go and test, go and back test, and if you like what you will be seeing, you can be using it. So number one, let's mark some gaps. So we have that gap right here, or we have this gap right here. So this is the fair value gap, right? And we have an order block. You can see that OB, right? So that is an order block. So what you are going to do is, you have inefficiency, you have a fair value gap, then you have an order block. You want to trade off the order block. Some people do trade off the fair value gap, but I do trade off the the order block. So the fair value gap for me has to be filled first, then price goes to what? Goes to our order block, then you say. So this is the 4 hour, this is GU, but you can use this information on the 5 minute for your for your entries, right? You can use it for your entries. Let me just show you real quick how you can use this. So number one, let's say you want to sell in this area, right? You want to sell in this area. So number one, what are you going to see? You are going to see that we have a liquidity grab above this zone, right above this high, into our area. Maybe this is a daily high, or a daily or a weekly high, or a monthly high, whatever it might be. Then we call this a liquidity grab, or a liquidity or a stop hand, or something of that nature, right? So price grabs all the money resting above this high, goes into your area of interest. This can be a daily high, a weekly high, a monthly high, or a yearly high, right? An all-time high, or something of that sort, right? So it goes there, retests, then comes and breaks a breaks a low. When it breaks a low, you can look for some gaps, fair value gaps in this zone, for price to fill. So what do you see here? We have this low of this candle, and we have this low, right? So this is the gap. When price breaks, it leaves these gaps, and as you can see, price does trade back to the gap and fall. So this is what you can do if you want to be trading fair value gaps on as your entry criteria, or something like that. Okay, so let's move on and look at what was happening today. Today is 15th Feb, Tuesday, right? So this is this is how price moved, right? And as you can see, there's no gaps here, but I just want to point something out to you, as we were saying. So this is some inefficiency in the market. As I said, it works as a magnet to price. It works as a magnet, and as you can see here, this was a gap created by this up move, maybe in the Asian range or something of that sort. And as you can see, price does come back and fill this gap, and continues to drop, and takes all the liquidity that was resting there. Maybe this was Asian low or Asian consolidation, but you see what we are essentially talking about. So this is what we see here, and this is what price is doing, and this is how you look at inefficiency, and this is how you trade inefficiencies. Let's look at another chart. Oh, you see, this is a very good example. Let's get rid of all those charts. You see, this is inefficiency. So if you could get an entry in this area, you could be targeting the low of this impulse. This was the impulse, and the impulse was initiated in this area. This is the inefficiency. So what do you know? You know that price has to fill in this gap, right? Just to fill this gap, by this move. So you know it acts as a magnet and it has to be filled each and every time. More often than not, it has to be filled. Let's look at something else. This efficiency, see where price is right here. So what can we do here? We can just mark out this breaker, right? And say price is going to retest here and fill this one and fill this gap, right? This is what we can do, and this is how we can use this inefficiency, right? That's number one. And number two, we can just mark it like this, right? This is the inefficiency which we see, the fair value gap, right? And what do we have? We have an order block in this area. So what price is going to do is it can just move, fill the gap, retest, and go. So this might be your trade, or this might be your trade. It depends with you what type of a trader you are, or what type of a trader you call yourself. So this is what we have here. This is what we have here. And if you look at the H4, we have a lot of inefficiency here. Why? As you can see, we have this gap, we have this gap, which you see inefficiency. So it has to be filled. Magnet, or it acts as a confluence. So you can use it as a magnet or a confluence. It's up to you, guys. It's been wonderful having you here. I hope to see you in the next video. I'm Shox and I'm out. Take care. Trade what you see.